Hi, and welcome to the Infront ASA Q1 2019 results presentation. Today we will hear from CEO Christian Nesbak and CFO Max Hofer. Over to Oslo.
Thanks, Stockholm. Christian Nesbak here. Welcome, and of course the greatest event, the biggest event this quarter was the acquisition of the VWD in Germany. We will come back to more information about it a little later. What else is new for Q1? It is that the acquisition of the Italian Market Connect that we did in Q4. So the numbers from that acquisition is now included in our Q1 for the first time. So this gives us a significant growth with 52% growth on the revenue, and also some growth in the EBITDA. But the EBITDA margin is somewhat lower since Market Connect had a lower EBITDA than Infront has. So this is mainly because it's pre-synergies. So we will be able to start taking out cost synergies already in this quarter, I mean Q2, and this will the cost synergies we will manage to take out will increase over time. So yeah. VWD. This acquisition will establish the combined company as a leading European player. There is a substantial up and cross-selling opportunities. We have significant synergy potential on the cost side, and together we will have an even more diversified revenue base. So looking at the combination of the two companies, we will have a pro forma 2018 revenue that passes 1 billion Norwegian crowns. The EBITDA will be 195. This includes the first batch of the cost synergy, those who are only license-based, that is that will be taken out within a very short time. We see that both companies has a very high percentage of recurring revenue. Altogether, we will have 90,000 professional users, and we'll have an operational presence in 14 countries. So our goal for some years has been to be one of the top 3 provider of data terminals and financial data in Europe, and with this acquisition we have reached that goal. We will get access to new markets, new products and customers, and have attractive cross and upselling opportunities. The revenue base will be a lot more diversified with more than 90,000 professional users, and we will have more products in our offering than we have had earlier. We will get access to new products in new high growth market like the regulatory technology and also wealth and asset management market. And then it's of course the cost saving that is fueling the whole acquisition. So we can take out 25 million quite soon, and over time we can take out a lot more. So running a backbone with real-time financial information is quite expensive, and now we have 2 of them. So to reduce to 1 and also to synchronize all the other activities has a huge potential, the cost saving part. So combined, we will be the biggest European player in the financial terminal and market data. We will have a number 2 position in the Nordics, and will be one out of the top 3 providers in Europe. So if we look at our the strategy we have had since the IPO, so it has been to continue to strengthen our position in the Nordic, continue to grow in new and newly established markets. We will continue to invest heavily in product development, and we will do acquisitions in Europe. And the goal for this strategy was to become one of the top 3 vendor of terminals to financial professionals in Europe, and with the latest acquisitions, we have reached that goal. So back to Q1. So this is not included VWD, but included Market Connect from Italy. And we can see that we have doubled the number of professional users with this acquisition. We have also continued the organic growth, and the revenue is up 80% in this quarter. When we look at the news and analytics segment, so this is quite flat, little decrease due to negative FX movements. So we see that within the news division, the decrease is 9%. And this is mainly because 82% of the revenue is in the Swedish krona that has decreased lately. So this part of our business is what we call our own content, and the main reason for having this is, of course, to support the other products. But we make sure that this division is profitable and relevant. So we are also offering other players in the market access to our news and also our analytics module. So financials, over to our CFO, Max Hofer.
Thank you, Christian. I will continue with the financial review for the first quarter. In the first quarter, the Infront Group reported a record revenue of 104.8 million Norwegian crowns. This is a very strong increase by 52% compared to last year's first quarter. The organic growth contributed around 5%, while the recent acquisition of Infront Italia accounted to the remaining growth. Further, we now register more than 3/4 of all of our sales in foreign currencies, of which euro is now the largest foreign currency. As in previous quarters, and very typical to our business model, almost all of our revenues are achieved through recurring subscriptions. Adjusted EBITDA increased to 15.6 million crowns from 14.5 last year. Before IFRS 16 implementation, the EBITDA stood at 13.8 million in the quarter. Overall, we only experienced very limited impact from the newly incorporated IFRS 16 accounting rules, both with respect to P&L as well as balance sheet adjustments. The recent acquisition of Infront Italia has been lifting revenues and EBITDA in the quarter. Year on year, we saw a 52% increase in revenues. And as said, the majority of those revenue growth is coming from the Infront Italia business, while a healthy 5% is organic growth. The gross margins have been negatively impacted on the inclusion of Infront Italia, as it is currently a lower margin business, but as already stated by Christian, we have been successfully already securing cost savings in Italy of around 5 million Norwegian crowns on an annual basis, and expect those to come into the P&L by Q2 this year already. The adjusted OpEx increased mainly again through the inclusion of Italy, but also due to additional personnel costs across the group that is supporting further growth in the future. The adjusted EBITDA increased by 7.5% year-on-year, including the IFRS 16 effects. Looking at the segment presentation, we saw a stable regional development this quarter. The other regions were boosted significantly by Infront Italia. In Norway, the revenue was basically flat at 26.5 million Norwegian crowns for the period. Revenues in Norway continued to be negatively impacted by loss of a customer contract in a non-core business unit. In Sweden, a positive underlying development is somewhat obscured by continued FX headwinds and the reallocation of revenues to other regions. Without these effects, revenue would have been at around 40 million in the quarter. Other regions, including now Infront Italia, are continuing to show improved organic growth with continued positive development in the new markets such as South Africa and the UK. Looking in more detail at the per segment development, we can see a continued positive development for Terminals and Solutions, which increased by 80% year-on-year. This segment accounts now for almost 80% of our revenue base. Combined revenues for news, analytics, and other showed a flat development year-on-year in Norwegian crowns. Moving on to the cash flow. Here as well, we can see a very stable development. The group started the year with 87 million Norwegian crowns in cash available. The cash flow from operations in the period was 8.1 million Norwegian crowns. Net profit contributed 9.6 million, while other cash movements, including a combination of depreciation and amortization and working capital movements, slightly reduced operating cash by 1.5 million. Cash flow from investments was minus 7.1 million. 2 million crowns were paid for 6 related transactions. Furthermore, the company spent 5.1 million on capex related to investments in PP&E and software development. Cash flow from financing was negative 2 million. The implementation of IFRS 16 results in a new financing cash flow element linked to payments for lease liabilities. As could already be seen when looking at the cash flow statement for the first quarter, we only see very limited impact from IFRS 16 on the financial reporting. This can also be clearly seen here on the balance sheet. The newly introduced right of use assets and lease liabilities accounted for roughly 33 million Norwegian crowns in the first quarter. Overall, you will see that the company continues to have a very strong balance sheet. Goodwill and customer contracts relates to recent acquisitions of 6 and Inquiry. Capitalized R&D is stable, as the company has a policy to expand the majority of developments directly. The company took up a 60 million Norwegian crowns loan to finance the acquisition of Market Connect in Q4 2018. Other financial liabilities relate to the 6 acquisition completed in 2017. The interest-bearing debt will be refinanced by the 105 million euro senior secured bond that has been successfully placed in the market in April. At this point, we also would like to use the opportunity to update you on our planned rights issue. As you know, the acquisition of VWD is to be financed through both a new bond of 105 million euros and a new equity raise. The equity raise is fully underwritten by a consortium consisting of ABG Sundal Collier, Danske Bank, and certain primary insiders, as can be seen on this slide. Additional pre-commitments and underwriting has been given by several existing shareholders, and the subscription period of the rights issue is expected to be completed during the month of June. In summary, with the acquisition of VWD and Infront Italia, Infront has achieved its strategic ambition of becoming a top European player. We now have a customer base of more than 2,400 financial institutions, serving more than 90,000 professional users across Europe. Our immediate focus will be to continue our integration efforts in Italy, and upon the closing of the acquisition of VWD, to quickly initiate strategic efforts focusing on integrating the businesses. We continue to see good interest in our products across all regions, and combined with the broader product portfolio that we will be able to offer with the newly acquired VWD group, we see also significant long-term potential for our organic growth ambitions. Finally, we will remain open towards selectively pursuing attractive M&A opportunities. We will specifically look into situations where we can further strengthen our market position in a region or further broaden our product portfolio. We thank you for your interest in Infront.